I'm Matt Bichard with REIT.com here in New York City for REITWeek 2014. Joining me for this CEO Spotlight is Gordan DuGan, CEO of Gramercy Property Trust. Gordan, thanks so much for joining us.
Thanks, Matt. Glad to be here.
Now, your company's undergone quite a massive transition from a real estate finance business to a net lease property owner. How's that repositioning been received, and how much more work is to be done?
Well, the good news is there's really no more work to be done in the transformation, and it's been received extremely well. Last year, 2013, we were the top performing REIT stock in the United States. That's obviously very hard to repeat because you had to start pretty low to get there, but it's been very, very well received. And I think in part the timing was right for the transition. The board made the right decision to do it at that time, exit the commercial mortgage business where we didn't have scale and enter into a business where we could grow and achieve scale. And I think we're really well underway on that.
Great. And picking up on that, this attempt to gain scale, where are you seeing the best opportunities now, both by asset type and by geography?
I think, more than anything, we like industrial today. We're an investor in both industrial and office, but office we're opportunistic. And we're investing in the top 25 markets in the U.S. We like to say the NFL cities, although we also invest in L.A., which doesn't have an NFL team. And we're finding really good opportunity in one-off transactions, 5 to 50 million, typically 5 to 25 million, smaller properties that some of our larger cap brethren are just not able to move as nimbly and buy, and we get better returns on those. So we really think the sweet spot are industrial and office properties in major markets, but at the smaller end of the spectrum, smaller deals. The larger the deal, the lower the returns is what we've observed in the marketplace. And because we're a smaller company, buying $10 million, $15 million properties actually moves the needle for us, would not move the needle for one of our larger cap competitors.
And lastly, can you talk about plans to expand the company's asset management business and how that fits sort of into this whole new Gramercy strategy?
Yeah, so we've done a great job of growing the balance sheet, adding assets. We completed a very successful equity offering a couple weeks ago. And we've really reached an inflection point where we're growing very quickly. Our acquisition target for this year of $600 million makes us the fastest growing REIT in the United States by asset size in terms of, we'll basically be doubling our asset size this year. And yet we see other opportunities based on the relationships and the experiences that we have. And so we want to be able to capture as many opportunities as we can. So we have a great platform with our asset management team and with our investment team. We can grow the asset, we can grow our company to 2 to 3 times the size we are without significantly changing our MG&A. So we have all the pieces in place to keep growing the business. So we plan to grow the company through these acquisitions of attractive assets with high returns, but also because we're managing assets for third parties, we think there are additional opportunities to use off-balance sheet equity where we're managing for third parties, earning a fee stream. It's a very high ROE business, and it's just another form of growth. I mean, we really have Gramercy focused on growth, so we're growing both in terms of what we're buying, and we hope to grow the asset management business that we have today.
Gordan, thank you so much for joining us.
Matt, thanks for having me.
For more on this and other REIT news and analysis, be sure to visit REIT.com.